Everybody, it's Kyle Daniels with Vista Sotheby's International Realty bringing you the weekly update for Wednesday, February 10th, 2021. And I'm going to talk about a few things. We're going to go over our normal market stats this week, but I'm going to dive into the why prices are going the direction they are going. I'm going to get into what's driving this market a little bit more. To start, and yes, it's crazy. I'm sitting here writing letters to property owners, seeing if they'll sell because inventory is still low. We had, again, 100 homes hit the market this past 7 days, which is great. We're at that 100 home mark, but traditionally after Super Bowl Sunday was when the real estate market had its launch date sort of thing. Well, we started off a few weeks ago, if you've been paying attention, we're already like going crazy. People are fired up. I just talked to a friend. The house there on Villa La Selva had 25 offers and it's going well above the asking price. And that's for a home that a few years ago everyone looked at and said it should just be torn down. But shows you the excitement in this market. We saw about 91 closed sales, and some notable things about some recent sales. We saw two properties over $10 million closing last week, plus a Strand and a few other big beach city homes and Palos Verdes estates homes. But one of them was a beautiful property up in Rolling Hills, actually sold $1 million over asking, and that was over $10 million. We haven't been seeing a lot of that, but just shows the popularity of Palos Verdes continues, especially some of the big properties in Rolling Hills. Rolling Hills in particular has never seen such a strong market. There was a point where we only saw one home sell in 6 months, and lately it's been just bananas back there. Best market ever in Rolling Hills. And you can say that about all of Palos Verdes as well. Arguably the strongest market we've ever seen here. People coming from so many places, again, 25 offers. But let's talk into the why. So again, 1-for-1 ratio, we're still seeing that high absorption rate. But what is driving this market? And here's a theory I want to share with you if you have time. So if you need to go, thanks for watching this far, but let's dive into the why. So you've got low interest rates. We have the government pumping all kinds of money into the economy, huge stock market valuations, record valuations every day, people making a ton of money. On the other hand, you have people that can't afford rent, so there's some extremes in the market, but the people that are buying homes aren't largely affected by the pandemic. And then you have the pandemic. We have clearly a shift in how people are living. In fact, Dwell Magazine is somewhere around here. They're talking about how homes are going to be changing for, needing a home office. Arguably, most of us have been working from home, but we're going to have flexibility in what we need and probably larger homes. Some people are simplifying, and the minimalists they're having their moment in the sun right now. But those that have kids and jobs probably want more space right now. I'm included in that. Even though we have plenty. Live in a world of abundance, but we always want more. So it's the American curse, we'll call it. But so there's this drive. So people, low interest rates, great economy if you have money sort of thing. It's funny to say in the pandemic. And then a change in how we live. So people are out there and they want homes. But I want to go one more step on that. People are buying properties right now, sometimes not in so much because they love the property, but they're afraid of losing it. And so this fear of loss has me taking a pause and say, are we back to cue my friend Alan Greenspan, if you remember that name from many years ago. But are we back to irrational exuberance? And so this is what I'm seeing. You've got low interest rates, so people that are leverage buyers that need financing to buy a home are coming in and they need to make their offer better, so they're driving up prices. They know that if there's cash buyers in the market, they're going to have to be better. So they're going to write a higher offer. So the home goes in, you get multiple offers, and you get countered. So the seller counters and says, well, hey, I've got some all cash buyers. So let's say we don't need an appraisal or a loan contingency because I've got this cash buyer. Well, the buyer getting a loan has to decide, okay, am I solid? Well, I need to improve my offer even more, so I'm going to write a higher priced offer so I can beat out the all cash buyers. And then we've seen a couple times in this past week where the seller actually takes, the price goes up, they drive it well over asking, and then they take the cash offer, which is lower than the highest financed offer, but it was the financed offers that drove the price up Used to be if you have cash, you'd write under asking. Well, not anymore. Cash just gets you in so you can get the house, but the people with loans are driving the price up. And this sort of price appreciation that we're seeing because of low interest rates, again, under 3%, is, in my mind, starting to artificially inflate the prices of the market. So what does that mean? Well, I think we can safely say you have probably a year of low interest rates ahead of us, everything we've heard from the Fed. And clearly the posturing from Washington is not to do anything to harm the economy right now. In fact, we want to see some inflation. But when we get into inflationary times or pressure with inflation and they raise the interest rates, let's say interest rates go to 4% again, which wasn't that long ago, is that going to lead a shock to the market? Is that going to take so many buyers out? These prices have been driven up. Sure, if you have all cash, it's not that big of a deal. If you're going to live in your home for a long time, it's not that big of a deal. But if you were buying based on highly leveraged positions and the rates go up, now you can't afford as much, prices were driven up, takes a lot of buyers out of the market, all of a sudden demand decreases, and as long as there's some supply, you'll see prices drop. So I think we're a long way away from that. I still think, hey, if you're buying for the long term and you find that perfect home, if you're having more kids, you're making more money, whatever it is, your needs change, by all means, if you can afford the home, buy it. But I'm watching some of these prices just not make sense in these bidding wars, and people are acting on the fear of loss instead of, hey, I really want that house. And the fundamentals, so stop and ask yourself the fundamentals of why are you buying this home? Does it fit your needs? Does it solve some sort of problem for yourself? Can you afford the home? Can you afford to buy it and then fix it up if it's a fixer? Or should you be patient in this market and just see what happens when we have a little more inventory? And God forbid, when interest rates go up, what's going to happen? So there it is. It's a long one. Thanks for watching. If you have any questions, please reach out. I'm going to get back to writing my letters, trying to find some properties for my buyers. And for the rest of you, have a great week, and we'll talk to you soon. Thanks.